What if I told you Bitcoin doesn't move randomly? It moves in cycles. Boom! Euphoria. Crash. Silence. And then, history repeats. Right now, the market feels strong. Prices are rising. Social media is loud again. New investors are entering. But here's the uncomfortable question. Are we at the beginning of a new bull run or at the edge of another 70% crash? Let's rewind. 2013, massive rally. Then crash. 2017, Bitcoin touched $20,000. Everyone said, though this time, it's different. Then it dropped over 80%. 2021, Bitcoin hit nearly $69,000. Institutions entered. Celebrities promoted it. It felt unstoppable. Then came 2022. Liquidity dried up. Interest rates surged. Fear replaced greed. And Bitcoin fell nearly 75%. So the real question isn't, can Bitcoin crash? It already has, multiple times. The real question is, what triggers those crashes? First, liquidity. Bitcoin thrives when money is cheap, when central banks print, when interest rates are low, when investors are chasing risk. But when the Federal Reserve tightens policy, when rates rise, when dollars become expensive, risk assets suffer. And Bitcoin behaves like a high-risk tech stock. Second, market psychology. Crypto is driven by emotion, greed during rallies, panic during corrections. When price rises fast, people believe it will never stop. When it falls, they believe it's dead forever. Both emotions are dangerous. Third, leverage. Every cycle, leverage increases. People borrow to buy. Exchanges offer high-risk products. And when price drops slightly, liquidations begin. Liquidations create selling pressure. Selling pressure creates panic. Panic accelerates crashes. It's a domino effect. Now look at today's environment. Bitcoin ETFs are approved. Institutions are involved. Adoption is higher. Supply is limited. Halving cycles still exist, but global debt is at record highs. Interest rates remain elevated. Geopolitical tensions are rising. Liquidity is not as free as it once was. So what happens next? Historically, after every halving, Bitcoin eventually rallies. But historically, after every parabolic rally, a deep correction follows. Could we see another 70% crash? Yes. Will it mean Bitcoin is finished? History suggests no. Bitcoin's volatility is not a bug. It's a feature. It moves violently because it is still young, still speculative, still emotionally driven. Every cycle shakes out weak hands. Every crash resets leverage. Every winter builds the next spring. But here's what most people miss. The biggest money is not made during hype. It's made during silence. When nobody is searching Bitcoin price prediction, when fear dominates headlines, when YouTube views drop, that's when accumulation quietly happens. So instead of asking, will Bitcoin crash 70%? Ask a smarter question. If it does, will you panic or prepare? Because cycles are predictable. Timing is not. Bitcoin could rally further, or it could correct sharply before the next leg up. But one thing remains consistent. Extreme emotion creates extreme movement. This is not financial advice. This is financial awareness. Markets reward discipline. They punish emotion. And Bitcoin magnifies both. If history repeats, another crash is possible. If history continues, another recovery is also possible. The real war isn't Bitcoin versus the dollar, it's discipline versus fear, patience versus greed. So before the next headline screams Bitcoin collapse, ask yourself, are you reacting or understanding the cycle? This is Money Mind 3D, where we decode the psychology behind markets. If this perspective helped you see the bigger picture, like the video, comment your thoughts below, and subscribe for deeper global financial insights. Because in crypto, volatility isn't chaos, it's the cycle.